So you got into ICT and have studied order blocks, fair value gaps, liquidity, and maybe the 2022 mentorship. But there's a few things that ICT forgot to cover. Before I figured out what I'm about to share with you, I was constantly tripping myself up and making the same mistakes over and over. I didn't have a solution because I didn't know what would actually help me. So by the end of this video, you'll understand the biggest mistakes that ICT traders make with some simple exercises to fix them. But before I do that, why should you listen to me? My name's Kyle and I've been trading since 2011, and it took me 8 long, excruciating years before I was able to find consistency in the markets. Once I did though, it was off to the races. I've now been trading full time for the past 3 years and have made over $1.2 million in that same time period. And if you don't believe me, here's some of my payout certificates. Also, if you want a full step-by-step PDF guide into exactly how I trade, make sure you check out the link in the description. Now with all that out of the way, grab your notebooks and let's get into the video. So let's review some of the biggest mistakes that most traders make. And at the end of this video, you're going to understand the cause, the solution, and I'm going to actually give you guys some exercises to improve on all of your trading mistakes. So to me, one of the biggest problems that I had coming up when I was trying to learn how to trade was really overtrading. And when you watch a lot of trading videos or movies, they make it look really exciting. And it looks like these traders are extremely active in the markets every single day. And what I had to learn the hard way was that there's not always an A+ setup every single day, which often leads to you possibly thinking that there may be trades that are appearing, or you think they're appearing, and you're kind of tunnel visioned on that. And there's FOMO, right? There's greed, and overall, just overtrading from a risk standpoint doesn't make a whole lot of sense. And I had a really hard time with trying to understand that waiting for the right setups does come with experience. It does come from you just participating in the markets, but understanding that the frequency of your trading plays such an important role on your equity curve. Because let's say if you're normally taking 5 trades a week, and then all of a sudden you have a week where you're taking 25 or 30 trades in that specific week, you're going to really see the difference between your P&L. Not only that, but you're going to see a major difference in your mental capital as well. You're going to feel extremely drained. You're not going to want to journal. Trust me, when I was over trading, it made it extremely hard to journal all those trades because you're not going to want to sit down at the end of the day and journal 30 trades that you took, especially if you want to learn from those mistakes. If you want to learn from your trading mistakes, it's very hard to do if you're taking too many trades, because when you sit down at the end of the day, you're going to look at those trades and you're not going to want to do the work, because either you're going to be red P&L or you just don't have the mental capital to do so. So there's a couple causes for overtrading. And for me, the biggest one I think was greed, fear. And I'm actually going to put FOMO here, because I think FOMO will actually trigger greed and fear, both of those. So not only are those two emotional triggers that you're trying to avoid in the markets, which is very difficult to do, you have to try your best to minimize them. And in my opinion, the best way to minimize that is to just set limits on how much you're allowed to trade during a given session or during a given week. Not only that, but overtrading comes from a desire to win or recover losses. So let's say if you had a plan coming into today or this week, you took the first trade and you end up taking a loss. Well, how many of you guys are going right back into the markets and wanting to put on another position to try and recover that loss, right? So there's revenge trading is directly tied to overtrading. And those two issues can blow up an account very, very quickly. You don't have a clear plan in place when you sit down in front of the markets. And when you get punched in the mouth, right, when the market fights back and tries to defend itself from you taking its money, it's going to turn around and punch you in the face. And if you don't have a plan, right, most people, their plan goes out the window when they get punched in the face, right? That's basically what Mike Tyson was saying. And, you know, you're going to get punched in the face a lot when you're trading the markets. Trying to stop overtrading is just something that you really have to force yourself to do. And when I'm going to talk about all of these mistakes, all of them are tied to discipline. You have to be able to remain disciplined to your plan and your process and not try to be the smartest guy in the room and try and think that you can outsmart the market, because the market is never wrong. A lot of times it'll get you into a pickle where it'll show you setups that really aren't there, and it'll take your money. So the solution to that is to obviously force yourself to stick to X number of trades per day or per week. Now, if you're new to the channel and you haven't tuned into me before, I typically will have poker chips on my desk, and I always have a visual cue on how many trades I want to take in a given session or in a given week, just so I can keep myself in check, because nobody else is really holding you accountable. If you want an accountability partner, that's great. But when it comes to trading, a lot of the time we are operating solo. One way I was able to fix this problem was to have a visual cue and actually force myself to stick to that plan. Because when you sit down and journal at the end of the day, it's all about making sure you're sticking within your rule set, forcing yourself to stick to X number of trades per day or per week. Now, I'm going to give you guys a challenge at the end of each one of these mistakes. That way you can improve upon them. And this is what improvement in your trading is all about. If you want to become a profitable trader, and if you want to make sure that these ICT concepts are working for you, nothing is going to work for you if you can't get a grasp of all these mistakes that I'm going to point out, because every trader falls victim to them at some point. So the challenge that I have for you guys for overtrading is set a maximum number of trades per day or per week. And once you hit that limit, stop trading regardless of the market conditions. I don't care how good that next trade looks. You have to build discipline, and the only way that you do that is by forcing yourself to step away from the screens. Force yourself to turn off your trading terminals, turn off your computer. If you have a problem with trading on your phone and you can't get away from the markets, that is a serious problem, right? You have an addiction to the markets. Put the phone down, delete the apps if you need to from your phone, and make sure you're only trading from a computer or desktop. That way it's easy to close the desk, close your laptop screen, turn your computer off, go outside, take a walk, take a hike, do something else. All right. So if broken, punish yourself by doing something hard. That also improves your quality of life. So maybe you're going to, do a Murph challenge. So if you break the rule, force yourself to do a Murph. Or if you're not that fit, go and do something extremely hard. Do 100 to 200 push-ups every time you break this rule. And I would even go more extreme, because you want to really build that discipline, and you're not going to want to do, say, 500 push-ups if you break the rule. Now, if you're watching this video and you constantly, if you're commenting, how do I stop overtrading? How do I stop overtrading? It's simple. Just stop doing it. You have to be able to get yourself to stop doing these things and stop making poor habits. Let's say if you get rewarded from a bad habit, let's say you get rewarded from overtrading, it's going to create this weird feedback loop where you're breaking your rules, but you're getting rewarded for it. And that's why trading, in my opinion, is difficult, because people break rules all the time, but they're attaching the outcome with the fact that they're making money in the markets, but you're breaking rules at the same time. And in order for you to improve upon your trading and last in this game long term, you have to recognize that even though you're rewarded, you're breaking rules. Get used to challenging yourself and punishing yourself in a proper way. Don't physically hurt yourself, but do something that is really going to improve your life. If I break my rules, I have to read 10 chapters of a book tonight. And if you don't have the time, you got to make time. You have to force yourself to do these things. But not only that, it's going to create a positive feedback loop where even if you break the rules, at least you're going to learn something from it. All right, so overtrading, in my opinion, is one of the biggest killers to trading accounts in general. And if you could stop overtrading, and the next point, overleveraging, you're going to come out way ahead. Overleveraging, again, I had an issue with. And in my opinion, it was lack of capital, but also because you want quick profits. You have some overconfidence in specific trades. Maybe you see a trade that you think is A+, and you want to actually take that trade for however long. At times, I was planning trades that were like 1 to 20s or 1 to 30s because I had so much confidence that this market was going to swing a crazy amount, and I was trying to over-leverage, have extremely tight stops, and I really wanted to turn that 5K account into $1 million overnight. What are the odds of somebody actually doing that? It's very, very low. People have done it before, but those people are probably in the market wizard's book, and they're legendary traders, and they're outliers, and they're unicorns, and don't expect that you could do the same thing. All right, so this is solid advice if you want to become a consistent, profitable trader and not be terrible at this game. Desire for quick profits overconfidence and the lack of understanding of risk. So sometimes people don't even know how much risk they're putting on. And if you're trading on a platform that doesn't show you that, that is a huge issue. So when I first got into trading, I had this issue as well. I didn't really understand position sizing until you really break it down and make sure that your stop losses are in a place that makes sense, first of all, but then you have to adjust your position size based on that stop loss. So if you have a wider stop loss than normal, but you're trading the same position size as if your stop loss was small, you're over leveraging, all right, without even noticing it. Because when you get stopped out, you're going to realize, oh man, I lost more money than I wanted to on this specific trade. So solution to this, extremely simple. And it was something that I did not have the discipline to do for a very long time. And this is why I'm bringing all these points up, is because as humans, when people tell you, don't put your hand over a hot stove, for some reason, we're so dumb and we put our hands over the hot stove anyway and get burned. And it's almost like trial by fire. But I'm going over these points because if you haven't heard them before, it's like I'm trying to just get you to absorb the information. Because oftentimes, like my mom would say, it's in one ear and out the other. And trading is very much like that, because all this information is recycled over and over and over again. But how can you actually absorb it and hold yourself accountable to that? I think maybe it's because you just need to hear from somebody that you trust. When I was having a really hard time, one of my good friends from Canada was really setting me straight, and he would give me these, verbal rants. And it was only because he was telling me these things that I was listening. Because sometimes we can't listen to ourselves. We know we have to be doing these things, right? Setting proper position sizes or setting strict limits for our position sizing, but we're just not doing it, right? And it's just, it's the human nature. It's part of learning and failing, but you don't need to go through as much pain as I went through and as some of these other traders have gone through before you recognize that. Challenge for you guys for over leveraging, right? Set a personal position size limit, which is lower than what you would typically trade. Because if you have a problem with risking too much, even if you go down to standard risk, let's say if you're typically risking 3%, 4%, 5% of your account, even if you go down to 1%, it's still pretty high, and it might get you in a position where you're like, all right, well, I'm used to risking 3%. Now I'm going to scale into this trade using 1% and then 1% and then 1%. And then all of a sudden you have this trade that's just as big as the ones that you took previously. So if you have a problem with this, limit yourself for a set period of time and commit to this for a set period of time. For me, I tried to do it for a whole quarter. Stick to one position size for a whole quarter and do that on a small scale. If you have problems with position sizing, this is another thing where you really have to kick yourself in the ass and be like, I'm only going to risk 0.25% or 0.5% for 3 months. And if you can't stick to that, punish yourself by reducing the position size even further. What do I mean by that? Let's say if you're risking 3% typically, and you go down to 1%, because you're not going to listen to me, all right? You go down to 1%, but you start scaling in again, all right? You're breaking rules. Reduce your position size to a point where it's going to keep you disciplined. Because if your discipline is all over the place and you just can't commit to this, you need to be able to commit to this if you want to win. And that's the biggest issue I think most traders have. They don't have a proper way to practice in the markets. So before you even think about consistency, you have to have rules that you follow. And if you can't follow those rules, you have to have better discipline. All right, so I'm giving you guys simple exercises that you can follow. And if you're not following them, punish yourself by reducing your position sizes. Because I guarantee once you get down to a certain position size, you're not even going to really care about trading, which is the exact point where you want to be if you want to make money in the markets. You should not be caring so much about one specific position. One trade should not make or break you. All right, and that's the whole point of me discussing this mistake, because this one is a huge elephant in the room. Over leveraging. Another mistake is you can't hold on to winning trades. This is extremely difficult because once you're in the position, it's almost like your emotions take a whole different turn. It's like, we forget all about the trading plan that we had in place when we first entered the position, and now all of a sudden each fluctuation up and down is causing us to second guess our trades, and it's causing us to maybe make impulsive decisions. So fear of losing unrealized gains is a major, major issue. Lack of having a clear exit strategy is another thing, right? Once you're in the trade, you're not following your exit strategy. And then it's impatience and impulse control. You have no patience to let the trade run in your favor. And then when it comes to impulse control, you don't know what you should be doing once you're in the position. Leave a comment if you've experienced this before. If you've entered in a position and then exited, and then all of a sudden you have mental clarity. Once you leave that position, you have mental clarity. But what changes about the markets? The markets are moving with or without you. Just because you have position on in the market, all of a sudden we have this mental switch that goes into fight or flight, and then all of a sudden we cannot hold on to our winning trades. But try and remove yourself from the position and just pretend like you're not in the position. That is the biggest advice I can give to you guys. And focus on forcing yourself to only manage the trade or take a partial if it's hitting a 1 to 2. If it's not at a 1 to 2, you shouldn't be doing anything, right? This is part of your trade management where you really should be improving upon your impulse control. Because if you can't hold on to your winning trades and you're making poor decisions in the market, it really is a death by 1,000 cuts. If you can't hold on to your winning trades, that's also going to trigger overtrading. And I dealt with that a lot, right? Death by 1,000 cuts. You can't hold on to the trade. Oftentimes you're flipping back and forth. Your impulses are driving your decision making rather than the other way around. You should be driving the decisions. Solution: implement a mechanical exit strategy. That to me is have an exercise where you're only gonna manage the trade, exit the trade, etc. if you're up a certain R value. And if not, you should not be doing anything. All right, so practice delayed exit visualization. So after entering a trade, visualize how price might move over the course of the next couple hours or days, and imagine both scenarios. Imagine yourself in a trade that goes in a drawdown. You have to get comfortable with doing that. So practice sitting with the discomfort of watching small pullbacks and remind yourself that short-term fluctuations are just part of the market. You have to get comfortable with discomfort. That is a edge in itself because 90% of traders cannot do that. They can't sit still in a trade. It's almost like you have to give them a fidget spinner to keep them distracted. Right? So when you place that trade, how do you feel emotionally? If you're feeling extremely anxious, take half the position off and see how you feel. If you feel differently about that trade, then you obviously have an impulse control and an emotional control issue with your trading. So if let's say if you can't hold your trade to a 1 to 2, if you break this rule, punish yourself by reducing the RR on your next trade. Now, at some point, you're going to be trading negative risk reward, but the key is to just be more hands off with your trading until you can push the limits. So if you can't even get a 1 to 1, what makes you think you can get a 1 to 2 or a 1 to 3 or a 1 to 4? You just physically and mentally are not capable yet. So start with the basics. If you're aiming for a 1 to 3 and you don't find yourself holding to at least a 1 to 2, reduce the risk reward and then force yourself on the next trade to hold longer. All right. And that's just a mental exercise that you can practice in your trading as well. That's something that you can tangibly do and focus on going forward. And do this for a set amount of time as well. You know, do it for a month at a time, 3 months at a time, a week at a time, and try and build these streaks. All right, because these are some of the big mistakes that I think hold a lot of traders back. Finally, micromanaging. This, in my opinion, is really just a lack of trust in your edge and your trading plan. And again, emotional reactions to the market. You're focusing too much on the short-term noise and not enough on your trading plan. One little impulse leg, a 5, 10, 15-minute candle, all of a sudden you're shitting your pants and you don't know how to manage the trade. Or you're over-managing the trade. You're tightening your stops when you shouldn't be. You're scaling in when you shouldn't be. You are exiting when you shouldn't be. You're just doing things out of anxiety more so than having an actual logical plan in place. If you find yourself micromanaging your trades, the biggest thing that I can recommend is just limiting your screen time. So schedule your market check-ins. If you guys follow Trading Composure, I believe on Twitter and on Instagram, he basically has mentioned that he only manages his trades 1 hour a day, 2 hours a day max. And he's limiting his screen time. He's a swing trader, mind you, so he's not watching his trades all the time. He's giving himself a window of time, 8 a.m. to 10 a.m., let's say, giving himself a window of time to only check his charts, and then he's closing his screens. So schedule your market check-ins, and if you can't do this, I recommend going up a time frame, because if you're trading the lower time frames and you find yourself micromanaging them, just take it slowly, because the candle closures play more importance than you seeing each tick in the market. How many times have you seen trades where if you just kept your initial entry and didn't do anything, you'd be in profit? And I can only tell you guys this from my experience. I just noticed for years and years and years on end where I would place a position, get scared from the fluctuations of the market, exit the position, and eventually that position would go on to hit my take profit if I had just done nothing. All right. And the only way you can do that is to stop staring at every single tick in the market and every little small fluctuation. So exercise here, a challenge for you guys: schedule market check-ins and plan to only have screen time at the closure of each candle, and practice by using the higher time frames. Even if you're trading futures on a lower time frame, start with like a 15-minute. Make this an exercise where you're going to use a 15-minute time frame for entry, and then step away for 15 minutes, and then come back at the end, check the closure, make a decision, and then step away for another 15 minutes. Because I guarantee you're going to stop micromanaging your trades based on specific candles just ticking up and down. Because how many times have you been in a trade where the candle flips on you, right? You're short in the trade, it flips bullish, and then you get freaked out. You're trying to micromanage the trade. Maybe you're flipping sides, and then all of a sudden by the end of the hour, it's back in your direction, right? How many times has that happened to you guys? Make sure that you are just sticking to the candle closures and removing yourself from the up and downs of the actual short-term noise that is really affecting you and is causing you to micromanage your trade. If broken, punish yourself by not looking at your next trade whatsoever. That is very difficult to do. Me telling you guys, as somebody that is a short-term trader, even me closing my screens and just taking a walk is difficult, right? But it builds discipline. It builds good habits. And that's the whole point of me sharing these challenges with you guys, because I'm challenging you all to become better traders. I'm tired of seeing people struggle with trading, and I struggled with trading for a long time, and without realizing that these are very simple solutions to your problems. Figure out what is the biggest problem in here, what's causing it, because you have triggers, you have emotional triggers, and you have physical triggers. Maybe you're getting in an altercation or something with your significant other, which is causing one of these things. It's about recognizing the cause, figuring out what the mistake is that you're making, and then coming up with a solution, and then challenging yourself to stick to that. The next time you run into these issues, and you will run into these issues, I guarantee you will run into these issues over and over and over again. They never go away. You just get better at managing them. I guarantee you, if you're well practiced in doing these things, you're gonna go right back to it like very easily. If you enjoy the video but are looking for somebody to actually hold you accountable, I'm here to help. If you book a call using the link below, you'll have the opportunity to work with a 7-figure trader. Ask me any question you want, trade live with me, and get someone to review your trading so you can make massive improvements just like some of my students here. But if that's not you, just go ahead and give a thumbs up, drop a comment, subscribe to the channel, as I'm dropping more free value every single week. So until next time, this is Kyle signing off.